There we go. All right, everyone. Well, thank you for joining the service room. I don't know actually if you want to take a couple of minutes break now before we start, maybe just 2 or 3 minutes, because it's 10:22, and maybe we'll just come back at 10:25 if you want a wee break or anything, because it's going to be just under an hour. Um, yeah, so I'll probably see you in a couple of minutes. In the meantime, if anybody is still here and wants to chat, please. So what do you do, Claire? Oh, just go. Oh, back.
Sorry, that's right. Yeah, so I kind of just starting out in business, so only sort of figuring out costings and stuff. But I essentially run accountability groups for those who are self-employed or just want a little bit more structure in their life. And also to build that out into more of a career mentoring service that I can offer to universities. So
Great.
yeah, it's a bit of a niche one.
I should have asked you that when there was more people in the room. You could have plugged your service then, couldn't you?
That's all right.
So how far down the journey are you then at the minute?
Um, yeah, so it kind of started. Oh, it started off the back of a personal project that I was doing, where I aimed to learn 50 different skills from scratch. So I've been doing that for the last year or so. Um, and the accountability groups, I probably started 4 or 5 months in, just as a way to keep myself accountable for different things. So yeah, I guess that's been running for about half a year now. And then the career stuff just seems to be what people tend to come to me to ask for help with. So I'd love to make that more accessible for more people. So that's probably more like last 2, 3 months where I put more of my energy towards that side of things. But yeah, still trying to figure out if one business, two businesses, or how to price it so that it's still accessible.
I think accountability is really underrated, and especially when you have quite a big business to deal with. There's so many projects that you can do is you can get distracted, and actually having somebody to guide you and to stick to and to have discipline, I think is really important. We try to do it with our clients. We have actually have 2 monthly sessions where people can join in for free, and it has quite a low. I think only probably half a dozen people turn up, but it's essentially a free session with Rachel for an hour. And in our heads, we thought, oh, it'd be a really big turnout. People come do the bookkeeping, but I think people just don't understand the value of being accountable sometimes, you know?
Yeah, no, definitely. And I think as well, like, and I think about your New Year's resolutions and stuff, there's normally like a set period that people are very keen to do it, and then it sort of tapers off. So it's sort of how can you maintain that accountability and sort of see the momentum long term?
Okay, cool. It is 10:25. I think most people are back. I'll just give another 30 seconds. Can you see my screen okay?
Yeah.
Awesome. So this is new for me, Zoom. And also the screens up the backgrounds I basically just copied off of Rachel's, but that's the best. Cool. All right. So just before I go into things, I wanted to go through some scenarios that we've had and explain some of the problems we've had, and hopefully you can learn from our mistakes and some of the things that have gone well. Um, I'll just quickly touch on the one that I spoke about earlier, which was when the flooring chap came to us. So quite often we'll have clients that, and again, like Rachel said, they run their businesses in that employed mentality. So they don't think about, I need to have extra income to cover the admin, extra income to cover finance costs, extra income to cover marketing, extra income to cover that time where I've got to actually do the quoting. So a little bit later on, when we come to working out our price, it's important that when we do the multiples and we're going, well, actually, I want to earn this income in the year, we have to go, well, actually, I'm probably going to take 3 or 4 weeks off. I might be ill some of the time. I'm not going to be 100% chargeable all the time. And so it's getting out of that mentality, and actually you are worth more than that because there's a lot more that needs to be paid for. So again, with this chap, I was really worried initially because he was one of our first clients and I got on really well with him. And it was, without exaggeration, he just increased his prices by 20% to see what would happen. And he was still busy. Nobody turned him down. And I don't know if that was reputation or they've used him before, or actually it might just be because there was a lot of demand for people that do flooring in the industry, and actually people didn't have a choice. Or maybe it could be that actually 20% on whatever price he was charging is actually, 30, 40 quid difference. And so although over a course of a year, 20% made a huge difference to him, actually to the individual, 20% isn't that much money when you want something done that you can't do. So that's one thing to think about. So we have a lot of processes now in the way that we manage our pricing. And the very first thing we brought in was changes for inflation. So for the first 2 years, we didn't actually do anything with inflation. And that was for a couple of reasons. One was because we started the business in COVID and we thought you don't really want to charge people more money when actually they're really struggling in their businesses. But eventually we brought in inflation. We then realized that we were doing small amounts of work, which actually the client could either do themselves. We could create a document so they could just use that rather than paying us. Or there was lots of little things where clients would come to us and say, can you just help me with this? Can you just help me with that? And so we created a minimum fee. And that minimum fee did lots of different things. It actually improved the type of clients that we took on. And not only did it improve types of client, it actually, something that I realized of doing business is clients that pay more want to have a better relationship with you. The clients that are looking for a low cost solution, actually, they're quite quick to find problems because they can just quickly move on to somewhere else. So that was the minimum fee. We brought in a matrix. So our pricing is cost plus for 90% of the work and then value for some other bits. So the way our cost plus works is, and some of you guys would have seen it, it's based on the time it takes for us to do a job. So I did that whole matrix. I said, this is what I want to take home. And I said, in order to get that, I need to have this level of turnover. And I then used previous years to work out what the cost of staff was to get me the profit. And from that, I was then able to make matrices, and using the estimates of how long it would take to do a job, I could work out how much I could make from each job. We also have internal reviews of fees. So this is very important, and I'll come to this later, but some firms do this quarterly, some do it 6 monthly. We actually just do it annually because it is a big pain. And we make sure that every year we put some time aside to increase our fees. Because if we don't do that, 2 years have passed, inflation's caught up with us, and we've suddenly lost a lot of money. So if I take the first year, let's just pretend it was £100,000 portfolio. If inflation was around 5% for 2 years, my portfolio is now suddenly worth £85,000, and I've just lost all that money by not applying inflation and not having a process in place to increase my fees. And then the other thing is competitor analysis. So even if you are doing value-based pricing, or even if you're in a position where your competitors don't actually impact you hugely, I would still suggest checking your competitors to see what they're doing. And even if you just do this once a year, not only does it help you understand what pricing structures your competitors have, it helps you realize what softwares they're using, what solutions they're providing, because it might be they're doing something differently that you're not doing, and actually you're falling behind. So again, I have another slide on this, but we spent probably 2 months at the very beginning of Strivex doing like secret shopping. So we went to lots of accountancy firms, and we wanted to find out what prices they were charging and how they would do their proposals. And once we did that, we worked out where we wanted to be in that market. And so that was how we came to our pricing and our structure. Anybody got any questions on that before I move on? Just get the chat up as well. Yeah. So how do you do secret shopping? You can actually pay people to be secret shoppers. We had a client that was a secret shopper back at the firm I used for 6 years ago, and it's quite a fun job. I mean, a lot of the time, supermarkets have secret shoppers where they go in and they buy products and they have to ask lots of questions. But what I did was and we were interested to work with our accountants at the time as well, but we created this client. We had all the services we wanted work for, and we went to the other accountancy firms and we said, what would you charge for this service? And so we'd call them up or we'd email them and we'd see how they would reply to us, because some would just send us an email quote, which was a bit naff. Some would call us and try to arrange a meeting. Others would send us proposal software, and others would want to have a video call and go through how you do things. And it was very clear that there was lots of different ways in which you could get back to a client. And actually, forgetting pricing, the proposal structure in itself already gives a value to a client, because they're judging you on how you are communicating with them before they even see your product. Yeah, that's the questions. So what we're going to cover. So I've got different slides. So working out your position in the market, calculating a cost-based rate. So Rachel spoke about cost rate, and I'm going to help you calculate it. Value and emotional pricing, or psychological pricing. So we're just going to talk about that in a little bit more detail and how it impacts us, because it might be, and I think some of you said in your comments earlier, that actually you are value and competitive, and you can have different structures, because we have different structures. I'm also going to talk about recurring income and one-off work and the impact that has on the business, because it might be that a lot of you are doing one-off pieces of work, and others actually you're getting into engagements with clients, and it's you're getting monthly fees, and all those have different impacts on the business. Inflation and review process. And then just after we've done that, we're going to just go through some questions, and then we'll do a little bit of strategy and planning. And the idea is we'll do that together, and then we'll join back with Rachel, and then we'll talk about the strategies that we've put together. Cool. Okay. So competitor analysis. What is it and why do we need it? So this is for pricing, but at the same time, you want to cover everything else as well. Because if you've got lots of competitors that provide the same service of you, you want to find out what they're doing and how do you do it better. Or actually, it might be you don't want to do it better. You might want to do the low-cost competitive version, where actually you just want to do a quick and easy job and at a low fee. Secret shopping. So this is where we are going to competitors and we're finding out how they're doing it. And actually, it might be that you get someone to secret shop you as your business. So we did this again 3 years ago. And what they do is they go through the process of how you're onboarding. Once you're onboarded, what is the service you're offering? And they pick out faults in the service that you have. Because if they can pick out those faults, then other clients that you have might have the same issues. Working with competitors to form community groups. So something we started about 2 years ago was mentoring for other accountants. And that then turned into a WhatsApp group of lots of other accountants. And with that WhatsApp group, every month we meet and we pick a subject we want to talk about. And one of the really good subjects is, what are you charging? And so we'll get a survey of everybody, what they're charging for their fees, and then you can compare it with each other. And it might not be fees, it could be you comparing how you provide your service, what softwares are you using, how do you communicate with clients. But that's a really nice way to see what other people are doing and to speak with them about it. Because sometimes you can look at things online, you're like, well, is that really the case or is it not? Talking about things online, so reading industry benchmarking and online directories. Bark, I think a lot of us are service-based businesses. Bark is an online directory, which you can pretty much get anything on now. So you can see what other people are charging. Although that tends to be at the lower price range, but it's a good place to start to see what prices other people are charging. And then, like I spoke about previously, the market analysis we did 4 years ago. So if you're really unsure and you're at the very start of your business, if you haven't come from that industry already and you don't really know roughly what the prices are, just reach out to loads of people that are doing the same thing and ask them what they're charging. And then once you've worked out what your competitors are charging, you're going to want to put that into information or data which you can use. So when we did it, we had the low cost fees at one end, we had the high price at the other end. And for this same service that we pitched to clients, there were people, sorry, for other accountants, there were people saying that they would charge us, I think, £600 and others saying it'd be £20,000. And so you want to understand why your competitors are charging those amounts. What are they doing that's different? And it might be that the £20,000 one was actually just someone sending us the fee to make us go away because they don't want to work with us at all. And it might be that the low price one is because they haven't done their own competitor analysis and they don't know what other people are charging. So you need to look at everything and go, well, why are they doing that? Is that correct? And then pick, where do you want to be? Where do you fall in that? Because your pricing is going to show to your clients and your prospects what sort of business you are before you've done any work for them. So if you take a Rolex, for example, that's tens of thousands of pounds, that's saying this is a fantastic product. Or if you get I don't know, like a G-Logic or an ice watch or something, it's a high street, whatever. But actually, what is the difference between those two products? So pick where you want to be. And then once you've picked where you want to be based on that pricing, you then need to make sure that your service matches that. And so when we started our business, we said we want to provide a top 100 accountancy firm service because that's where we trained. So we said, right, well, what are the prices they charge? Okay, it's this. What do we need to do to get that? Okay, this is the service offering we need. And so, yeah, should it be based on a perceived offering? And then my next point is, it doesn't matter if you're a low cost, high volume model or a high cost, low volume model. They both work. We work with other accountancy firms that are right at the bottom end and they outsource all of their work and clients are just churning constantly. But it works. They make money and they're growing and it's fine. But you just have to understand with both of those different types of models, you have different pressures. So with a high value model, it might be you're going to get clients that have a lot of money. And if you make a single mistake, they could put a lot of pressure on you and that could be financially damaging. If you work on the low end, it might be that you get a lot of bad reviews, but you don't really care because you're not meant to be providing a premium service. And so working out where you want to be in the market. Okay, cool. So working out your day rate. And I always do this by reference to a profit and loss account. I know I'm an accountant, but it helps me understand why I have that day rate and it helps me stick to it. So where we looked at that Excel spreadsheet before we worked out our take home pay, we would then work out, put on the next sheet, take home pay. We then work out our profit. We work out our turnover, cost of sales. So I think this is where a lot of you are going to spend most of your time. And understanding the turnover and how you get there is going to be different for each and every one of you. So for some businesses, you're going to have recurring income and it's going to be very easy to forecast. So you'll have contracts, next year it's going to be that plus a little bit or less a little bit because you lost contracts. And then others will have a way of advertising so you continually generate revenue, but you're never quite sure how much it's going to be. But once you've worked out what take-home pay you want, you can work out how you're going to price your turnover to make that. And so what I do every year is I run a profit and loss and I split it up between my income, my cost of sales, and my admin. And then my admin costs are probably similar to a lot of other service-based businesses. It's going to be a bit of software, maybe a bit of office costs, a little bit of insurance, some traveling, and all that is variable on how many sales you're generating. So you can use those admin costs to you can calculate those admin costs by multiplying your income or your cost of sales. Your income you can work out by taking previous years and forecasting, and your cost of sales should be, depending if you're working by yourself or if you're working with a team, again, it should be a multiple of your income because you need those costs of sales in order to generate that income. A quick and easy way to help you do this if it's the first time and all the profit and loss is a little bit confusing is the 25-25 rule or the 33-33 rules. So 25, it's actually 25, 25, 25, 25, being 25 is the cost of actually doing it, someone's wages. Another 25 is your admin cost. Another 25 is marketing, and another 25 is profit. So whatever you want to take home, you multiply it by 4. And then you do it backwards in that you spend the other 3/4 on those areas of the business. And it's the same for 33-33. It's 33 of doing it, 33 of admin marketing, and then 33 of profits. And so this is important when you're creating a day rate because you're going, well, actually, and I think somebody put in the chat earlier, it's £350 a day, but you're not going to take home £350 a day because you're going to be spending X, Y, and Z on other things. And so if you're starting out and it's just you, then actually £350 a day is quite a lot of money and it's lucrative. But when you start with a business and you've got other people and you've got more admin expenses, actually £350 a day might not get you very far, especially when you've got teams involved. Okay, so just briefly talking about teams, you're going to want to find a way in your financials to work out how much each person or each team is making. And I guess actually before I go into this, is there anybody that has a team? Because if not, I can just move on. But briefly speaking, okay, Adam, nice one. Yes. Oh, great. Okay, cool. Oh, loads of 4, 5. Okay, yeah, okay, definitely do this one. All right, if you got a team, so this is really important. And actually, I was speaking to an auditor the other day who runs a business, and I said, "How much money does each of your team members make?" And she's like, "I don't know." I was like, "What do you mean? You don't know? Like, well, how do you know how much each person is making?" She's like, "I don't." I was like, "Well, how do you know how much you're making?" She's like, "I don't." I was like, "You're an auditor. You know these things." And obviously, in our world, it's easy when I do it. But for you guys that financials isn't your thing, sometimes you don't even know what you should know because you don't know you can do it. If you can find a way in your accounting software or your banking or with your invoicing to work out how much each person is generating, you can work out the profit on that person. And then that comes into hiring, firing, performance management, all sorts of things. We do it in our business so that whatever work somebody does, that invoice goes under their name. So at the end of the month, I can run a report and go, right, this person's billed that, that person's billed that, that person's billed that. The internal team, no, it's different because they don't really generate much, but I know the value of time they save me. So when you have a team or you have people, you need to understand how much that person is making because they can very quickly not make you any money at all. And you need to find a way to keep them financially motivated. So all of our guys are given targets and they have to hit those targets each month, although realistically nothing really happens other than getting a bit of a slap on the wrist. But those targets, they actually find motivating because they're like, oh yeah, I'm doing something, I'm helping the business. And each month what they'll do is, and our clients will know this, if you've done your invoice, you're more likely to get an invoice at the end of the month. And that's because that's when their targets are due for. And if each month, 4 or 5 people are just getting out one extra job, that's 5 extra jobs a month. And then however many that is, 60 extra a year, So Working out margins on the team is super important because each person is going to have a different margin. Trainees are going to have trainee costs. They might have apprenticeship costs, whereas seniors might be a lot more expensive, but they might generate, 4 or 5 times more than their salary because they're more technical. Is there any specific questions anybody has on teams before I move on?
James, I just had a question about the 25-25 and 33-33.
Yeah.
Is that like not factoring in how many days you're charging for? Like how, do you know what I mean? So obviously you're not going to be charging for 5 days a week, 52 weeks of the year. So
Yeah.
when you say you just times it by 3 or times it by 4, do you factor that in or not?
Yeah, so if you're working out somebody else's charge out rate, so say one of our juniors, whatever they're on, I guess, I don't work out that. I guess 15, 20 pounds an hour, probably something like that. So their charge out rate would be 3 or 4 times that. And then when they're doing a job for you, the time they spend on that job will be the number of hours multiplied by that rate. Yeah. And so I think our juniors, a lot of them, I think it's £80 an hour that they charge. And our managers are like 120, for example. And then you multiply that by 3 or 4, depending on the business structure that you have. Yeah. And that's specifically from one job at a time sort of thing. It just helps you focus on that specific area rather than thinking about everything and doing all your profit and loss. That's a quick way to work out what you want to work. Charge rate needs to be cost plus overheads proportion. Yeah, Janine, if that's the structure that you want, then yes. But I'm going to come to value-based pricing in a minute, where actually that kind of all goes out the window. But what I'm talking about now is cost plus, and cost plus is going, well, this is what I want to take home at the end of the day. How do I work out my business structure based on that? And then just quickly, so too many things on my screen. To work out someone's annual salary, you basically just double their hourly rate. So if you take a £20 an hour hourly rate, that'll be a £40,000 salary. And that's because you times it by whatever it is, 48 weeks in a year, 7.5 or 8 hours a day, it's roughly double. So if you think about hiring and firing people, that's how you quickly work out the yearly income based on hourly rate. Okay. So yeah, as an example, Ella, when we were talking about 2 or 3 times, so if I've got somebody that's on a £40,000 salary, they should be generating 120,000 plus for the business. Yeah. Okay, cool. Does anybody want to go into more detail specifically about their business before I move on?
Did Rachel say, sorry, James, did Rachel say that we can get like a copy of this or something similar in the university?
Yeah, we can do. The university thing. So that's starting below this. That's working out what you want your take-home pay to be. So it works out what your priorities in life are, and then it works out how much money you need to spend to get that, and then you work your way all the way upwards.
Okay.
But I can send you a copy of this afterwards if you want.
Yes, please.
Yeah. All right, cool. So value-based pricing. Rachel did talk about a lot of this previously, but I'll go into some more specific examples. If you're doing some work for a client where they can see the value, so it might be you're doing some marketing work for them, you're doing a consultancy work, and they can save a specific amount of money, they can generate a specific amount of money, then you're more likely to be able to charge them more than what you could on a cost base. The reason being is they know they're going to get the money out of you because you're generating them more than if they didn't have you. Marketing, for example, if you find them 20 clients, but it only costs them the value of 2 clients to do it, then they're probably going to say yes. You'll find that in our industry, quite a lot R&D claims is very similar. So we can put an R&D claim in for a client and they can get tens of thousands back. So a lot of businesses will charge a percentage of that. So that is where we would do value-based pricing. Motion-based pricing is where people are brought into the brand. And so again, it's a little bit like psychological. And it doesn't necessarily matter how good your product is, they want you. And this is actually a really important thing. And I think the world is changing this way a lot more because we're just throwing away products and getting new ones. We're not buying things that last. We're listening to people on social media now, whereas years ago, you buy something that you want to last, that lasts forever, but now you just want that specific product. So I think this is quite a lucrative thing to do, but it's very hard to get there. And I think you have to put in a lot of free time to get there. So for you guys that are on social media, that's a really great place to start because people that are coming to you through your Instagrams, your YouTubes, your TikToks, they're already bought into you and they're more likely to spend money with you because they want you. So if you're looking at prospects and they're coming from different sources, it might be that you go, well, where is that one coming from? If that's coming from somewhere where they know about me, they've been following me for a long time, should I be charging a premium because they want me over everybody else? And we find this a lot with the accountancy platform, although most of our prices cost plus anyway. People have been following us for a long time and they just want Rachel. And it doesn't matter what product that she's selling, they want Rachel. So when it comes to pricing, I think it's not just about the price that you are settling at, it's that perceived value that people think they're getting. So it's that step before that. What can you give people before they actually purchase anything? What does your proposal look like? What does that prospect call look like? What does your social media look like before they've brought in? And then this is something I mentioned a little bit previously. The price sensitive clients are more likely to look for issues. So we find this a lot. And we actually have a system now, process now, where we don't take on clients that have income below a certain amount because they might struggle with when we put our prices up the next year. They probably won't be able to engage with us as much as they'd like to because perhaps the reason their income is low is because their prices are low and so they're really overworked. So they would generally look for issues because they don't want to pay that fee. They just want to move on somewhere else. Yeah, and I said that comes down to advertising, social media, receive quality. Can I just read the chat before I move on? Cool. Okay, so this is a really important thing. First point, not so much about pricing, but about the future of your business. The value of your business increases if you have clients that are on retainer, because somebody that's looking to buy your business will go, well, if I buy that one, I'm definitely going to get that next year. Whereas if you're a small business owner and you're generating income because people are coming to you, as soon as you sell that business, what are people actually buying? Because you're gone. So there's a lot of benefits to moving on to retainer. That's one of them. It's very easy to manage cash flow because it's going to be the same fee, whatever you do, monthly, quarterly, 6 monthly. It'll help you with growth planning. So you'll be able to look at, okay, well, this is what I'm generating now. That's what I'm going to generate in the future. I need to start hiring soon. Staff clients now one-off fees should manage your cost. Yeah. And so if that's the truth, then one-off fees should be the opposite. If one-off fees are only done once, you have to spend more time getting somebody signed up, then you might not get income in the future. So your price should be higher. And when you're talking to a client, you should say to them, look, we've got this option if we're going to do continued work together, or if it's a one-off, actually it's going to be a little bit more because it's going to cost me more to do it. And And then, on the same principle, a lot of clients we find they will do things as favors or for free or at friends rates. And something that I'm really keen on saying is mates rates shouldn't exist, because if they are your mate, they should pay the full price of your service. Otherwise, how are they actually helping you, and why would you want them as a client? So tradesmen and similar industries that are going out and they're checking out a project before they actually do any work, but they need to do a diagnostic check. And it could be the same in the service industry. You're actually, I don't know, if you're providing marketing, maybe you're going there and you're reviewing their current systems. You wouldn't do it for a prospect call, but if you're actually providing some sort of feedback, you should be charging for your time, because all those small meetings can add up over the course of the year. But I have got a point under here, which is interesting. So our web developer, when we first started working for him 4 or 5 years ago, he used to charge us £50 to have a meeting to see if we would work together. And for me as a business owner, that was a turn off immediately, because I was like, well, why do I want to pay you to see if I want to work with you? And actually, I then didn't work for him again for a couple of years. And we spoke recently, and he does provide a really good service, and he stopped doing that now, and we've used him for our new website. But the point is, where I've talked about minimum fees and like nominal fees, actually you need to be careful that you don't overcharge for things, because it can put people off as well. Yeah. One of 50 in the first year of business. Okay. So this was really interesting. When we started our business, we did loads and loads of things just because. So it might be that a client is signed up with us and their confirmation statement was overdue, and we're like, oh, don't worry, we'll do that for you. Or it might be that they signed up with us and the previous accountant hadn't done their bookkeeping, so we just get their bookkeeping up to date. And it'll be 2 or 3 months worth of bookkeeping. And sometimes we do these things, but not too often. But once we added it up, we now bill for all our one-off fees, and each month we generate about £4,000 of things we never used to bill. And when you start billing for these things, the clients respect your time more. And then when you do work with them, it's a better relationship. And that's not to say charge for everything, but it's to go, well, actually, should I be charging for that? Would someone else charge for it? To make sure that you are covering your time for one-off fees. Sorry, Rachel's just messaged me and said, am I okay? Yes. She's good to me. All right, cool. One-off fees and first year business. Yeah, no point. First year business. There might be some of you new in first business, and you're thinking, well, I can't really do all of this because I don't want to lose any clients. And yeah, I 100% agree. We took on absolute rubbish clients for the first year. And sometimes you have to. And everything that Rachel and I might say to you guys, get your fees up, make sure you bill for this, do that. But you can't always do that. And I completely agree with you if you say, I don't want to lose clients, because when you do all of these things, you will lose clients. And you need to be in a position where when you lose some, it's fine, because the value of the others that you've increased is more than what you've lost. And we went through a really big pricing change last year. If any of our clients are with us, new ones probably won't notice, but the old ones definitely noticed. And that's when we brought in the matrix. And we probably lost 40 or 50 clients just because of fees, but the value of our portfolio increased. We did that for lots of different reasons. One, because we haven't changed our fees for ages. And two, because when your fees start becoming low, your job becomes challenging because you're doing lots of work, not because you have great work to do. And so if you have a team that are doing a lot of work and it's challenging them because they're busy, but not because their mind is being challenged, those staff are going to get bored and move on. And so we wanted to create a structure where the staff are being challenged for technical issues and like, specific client relationship things they want to help. Maybe a client's having a baby and they want to help them with that, not because they've got 10 jobs they need to do this week. And so the price of your business will not only impact the value that you're receiving is monetary terms, it will impact your life in terms of time. And so it's important to make sure that you value yourself. 11, oh, look at that, 11, that's good. Inflation and processes. So do it at least annually. If you don't, you regret it, because I think inflation last year or the year before was like 10% or something. So you should definitely do something. We do 5% every year. That's pretty common in the accounting industry. And the reason we do that is because some years it's more, some years it's less. So if a client's expecting 5%, they're less likely to be upset by it. So we lost out last year because inflation was 10% or whatever, but years before it wasn't. It was like 2%. So we do 5% every year, and that's quite clear. When you make price changes to clients, this is where processes come in. It is hugely difficult to communicate it with them, and someone will generally be unhappy for a reason. So we try our best. This is what we do. We have it in the proposal, there'll be increases in the engagement letter. We put it on our invoices. And then when we request records, we say, hey, do you want to check your fee before we start? Regardless of doing all of that, sometimes what happens is we do the work, the fee's gone up, and the client goes, why didn't you tell me? And so communicating price changes is really important, because that's a really easy way to lose a client, even if they agree with the new fee. And sometimes it doesn't matter how big it is. We have a client where they spend £4,000 or £5,000 of us, and when they started, it was about 4 years ago, and I said, we'll do your dormant accounts as a favor because we're a new business, we want your business. And it was like 50 quid or something, and our dormant accounts fee is like 250, 300, because you have to do the accounts, corporation tax, do the worker papers, do the invoicing, and all the rest of it. And so I said to him, this year, you've had that same price for 4 years. We want to, make it at least somewhere in between, or this same as everybody else. And he was upset by that. And the reason he was upset wasn't because it was a huge increase in terms of monetary values. Percentage-wise, it was like a 600% change. But it's because he's had the same fee the last so many years, and so he wasn't expecting a change. So as soon as you start making changes, people are going to be upset. But once they get in the routine of it, they'll start to accept it. And so when you do start bringing in all these changes to pricing, you are very likely to lose some clients. But they're probably the clients that you don't mind losing, because if they can't understand that you need to increase your prices because everything that's going on, then maybe you don't want to work with them. 5% process. Yeah. So when you have a team that are raising your bills for you, this is super difficult because they don't really care. They just want to do their job. And the year before last, we had the process where it is the inflation, make sure, you check last year's so that it's gone up. But when, the managers or Rachel and I would do a job, we go, oh, hang on a second, this job took 3 times as long as last year because the business is 10 times as big. We would say to the client, we've had to do a lot more work this year. It's taken us a little bit longer. Do you mind us charging more? When you have a team, no matter how competent they are, there's going to be someone in the ladder that has missed something or hasn't done something properly. And quite often with billing, that's the case. So for a whole year, we had clients that were growing a size takes a lot longer, and we weren't billing more for that work. So if you guys have work
James,
oh yeah, go on.
sorry, about that, can I ask you a question? Sorry to cut you off. This is really interesting. I was wondering, I have worked with a couple of accountancy firms, and up to, and over a certain turnover, they would work out the prices based on the client's turnover to reflect this thing of their growth and the volume of work and the volume of transactions. Have you ever done that? And what are your thoughts around it?
Yes, that's what we do now. That's literally what we do now. But it's difficult because it might be that some client, turns over £300,000 and they got 2 invoices. And actually, to those clients, it can be unfair. So there is a bit of give and take. But this is what I was about to say. This is the process we've now implemented, because you have to give the staff something to follow. So what they do now is they check the client's records and they go, all right, what was the size of the business? What was it last year? What's our fee matrix? I'm going to apply that. And since we've done that, we've been able to increase our what's the word? Our target for each staff member by £1,000 each month. And that's simply because this was all the work we were missing off. And where they've grown, we weren't charging them for extra time. And so pricing, as well as inflation, it needs to reflect extra work you do, and you need to find a way to track that, whether it's timesheets, whether it's the size of the clients, whether it's the extra value you're giving them. You need to make sure that you're billing for what you're worth. And when you've been working for the same client for a long time, you need to make sure that growth is also your growth. Yeah, good question. So that's surveys, 5 years, fees, more fees. Okay, yeah, these are cool. So importance of minimum fees, nominal fees, and one-off fees. Minimum fees are already spoken about. So our matrix, which you were just referring to, is a minimum fee matrix. So it might be actually they're the opposite. Like, this is the minimum fee, but they've got 20 bank accounts they want us to reconcile, and they're an absolute nightmare. None of them are reconciled. So that one will be a little bit more. So we have a minimum fee to make sure we're never below a certain amount. Nominal fees. So this is an interesting one. We call it a nominal fee, but it's where you're doing something which isn't necessarily part of your engagement, but you need to let your clients know that your time is valuable. And if you did this for 700 clients, or I'm just making up a number, it would cost you a lot. So our nominal fee is like 55, 60 quid. So if somebody wants us to do something, I don't know, it's like maybe it's a lettings agent's reference or something, and we have to do a letter, and then the manager has to review it. We charge £55 for it. And that's to set the expectation that you can call us whenever you want. We're always here for you. But if you want us to do work, we need to cover our time. Because quite often you can get clients that will call you and they'll say, I've just got a question on this. And then, we're done. And then they'll ask you a follow-up question. And then they'll ask you another follow-up question. And so by putting all of these things in place, it makes sure that clients value your time. And clearly, when you do the proposal at the very start of your relationship, you can say, look, this is my expectations of you. We can talk this amount, or we can talk about this. But if we then start talking for too long, or you want to start talking about this, then I need to charge a fee. And then one-off fees are spoken about. Cool. So what we're going to do now, we have I've really done well for time. We've got about 20 minutes. So we're just going to, you can come off mute if you want, or you can stay talking in the chat, but we're going to go through everything we've spoken about today, and we're going to try to put together a basic strategy, and whether that's just your own rates, or we do like a whole profit and loss and go, this is what my business wants to look like. So we're just going to sit down, spend some time doing that. Ask me lots and lots of questions while I'm here. And then we'll probably share a little bit between ourselves before we go back into the other room. And then Rachel, well, I expect she'll ask me to pick on some of you. So if anybody of you wants to be picked on. Cool. So think about the model that you want your business to look like and what you want take home pay to be. Work out what turnover you need for that. Think about what market position you need to be in order to obtain that turnover. What are your competitors doing? Work out the rates that are going to help you achieve that. Yeah, and then we're going to share strategies, right?
Hey, James, thank you so much for that. It was fantastic. Just
You're welcome.
Question.
Yeah.
Yeah. Basically, with the model that I'm operating, we're online coaches, and at the moment, the 5 other coaches, or the 4 other coaches that I'm using, they're all subcontracting. And my headspace was very much want to put them first and support them. So we operate at the moment an 80-20 split. So they retain 80% of the fee, and like 20% comes back into the business, which now going through this seems a little bit silly. But I think over time, as the business develops and grows, there'll be multiple arms of my kind of money coming in, not just through the coaching. It'd be interesting to know how that would change in time. I'd love them to be employees and be paid a salary for the work that not only they're doing with the athletes, but also as part of the business as well. Have you experienced that type of transition before, and any kind of ideas on how that would work with employees to go from kind of subcontracting to then being employees?
Yeah. Have you spoken to any of them about wanting to move into employment? I don't know what their thoughts are, because I guess it's fitness, isn't it? You do?
Yeah. Not just yet. Thing is, I'm very much at the start of evolving the business, I suppose. We've only got one big event at the moment, but that will hopefully change to have multiple events in the year. So I'm kind of thinking about different pricing models and how kind of the business would make enough money to pay salaries and take the pressure of them having a certain number of clients to meet their needs on their own as well.
In that industry, are they generally employed, or are they self-employed?
Self-employed.
Because they might not want to. What you could think about is that 2080 is quite similar to the finance industry. So in the finance industry, it's like 2080 all the way down the chain. And what will happen is, well, firstly, 20% isn't bad, because if you think of it from a business perspective, 20% of your turnover as a profit without having to do anything is pretty good. But then it depends how much work you're doing with them. One of the things you could do is the way the finance industry works. So if you've ever gotten a mortgage, you might see that the mortgage broker gets what's called a procurement fee. So they get a percentage of the loan, but then they might also charge you an admin fee. So it could be that your guys get 80%, but maybe your clients have to pay like an admin fee or something, which comes directly to you. Don't know, just a thought.
Yeah. Okay. I think you're right. It's communication, isn't it? So ask them actually where they want to be first of all, and then see how that evolves over time.
Yeah, but if they do want to move to employment, yeah, it's pretty straightforward. With employment, you just have to work out what their gross wages are going to be. They're going to be, they have a bit of employer's NIC on top and a bit of employer's pension on top. So it'll be a little bit more than whatever you're paying them. And then you just need to take in consideration that they're only going to work, I don't know, let's say 47 weeks of the year. So 48 with holiday and 47 bit of sickness or whatever. And then work out how that compares to if they're self-employed. Because when they're self-employed, you don't pay them when they don't work, right?
Yeah.
But we always find, because we want to employ everybody, we find that you get more out of employed people because they want, well, firstly, they want to be employed and they want to do more. And it might be those people that are currently self-employed will only do the job you're giving them. But if they're employed, you can actually give them more things. So somebody that only does one task could actually end up helping you with multiple things because they're employed and they just want to help the business.
Yeah, that's the kind of transition where we're looking into. We've defined roles for everyone, and it's now understanding how to move between those and how it works if they were because at the moment the business isn't generating enough to actually for them to be fully employed, because some of these guys don't have enough athletes to support themselves on a full-time capacity just yet. So it's very much just riding this wave of the business growing and understanding how it's just real-time changes, if that makes sense.
So you're at that position now where when you start a business, doing it by yourself is great, but going from 1 to 2 or 3 to 5 is very difficult because that one person has to support the wages of the 2 and the 3. And so you either need to somebody needs to take on more work that they can handle, or you need to get a cash flow injection, or what you could do is you could sign up clients for I don't know if this is possible entry, but you could sign them up for 3 to 6 months time and then get a list of clients ready to join you. And then that way the burden is less because you've saved up for it.
Yeah. No, okay. Appreciate that, James. Thank you.
Hey, James. Sorry, I also have a question. Thanks so much for everything you've taken us through.
Welcome.
really great as a very creative person to hear more of this like fully tangible financial business side of stuff. You obviously know what I do. And I would love your thoughts on with the pricing stuff, because what we offer, I'm very, very clear myself and know how to communicate kind of it like you're paying for this service and this is going to save you money on not doing it another way that doesn't work historically for lots of businesses in your position. I also know we have a very unique selling point, and I see our gap in the market. I think sometimes what I struggle with is because unlike with accounting, for example, where we can say this is literally the tangible exact thing you will get once you've paid, like your books will be done, your tax return will be done, and that's what you're paying for. And obviously you guys have extra sort of services on top that are like really great for the clients that are aside from that, which are kind of the cherries on top. But obviously with what we do at The Scoop, so just for context for anyone, I'm a journalist and we teach people how to do media outreach and PR in-house without paying massive PR fees. But obviously I can't say you will absolutely 100% get this by the end of it in terms of press, which is what most people think of when they think of that kind of service. Like, I know what we do works and I know the value for them in the long run, but I just wonder what your thoughts are on how you make a good balance between giving people tangible KPIs, but when it's like, this is more like going to save you money in your business in the long run and actually give you a lot more control over this aspect of business, if you see what I mean.
Yeah, I think it's twofold, because there is kind of a tangible saving because they're not employing somebody to do that role.
Yeah.
So you could work out what the cost of employing somebody is and saying, look, this is the immediate saving. Well, not saving, but this is comparable to our fees, whatever it is, more or less. So that's the monetary value. And then in your instance, I know Rachel had, there were contacts that she was put in touch with that, if we just hired somebody in-house, or Tam's in our digital marketing, if we say, can you do PR now? She wouldn't be able to get anything because she doesn't know anybody. Where you have contacts and you know how to find contacts if you don't have them. So it's very easy for you to say, look, this is the cost of having that staff as part of your team. And this is our cost. And then you can say the benefit of actually having us is we've got all of this experience.
Yeah.
Whereas you wouldn't have that.
Yeah.
And that's where the value is, I think.
Yeah. Thank you.
Welcome.
Could I come in on that sort of concept, James, and ask from a different perspective of where I don't think personally I can tangibly calculate the benefit that I'm providing people, because I'm a holistic health practitioner and every individual client is getting something different. So it's not a benefit in their emotional or mental health necessarily that is driving business performance. It could be individual support that's very different. So I don't know if you have any advice on how you calculate that value when it varies differently from person to person. And I'm challenged in how you quantify that, because it changes person to person.
Yeah, I feel, correct me if I'm wrong, but I feel like working with you is like a feel good, like you do it to make yourself a better person, almost like training or like, this is a bad example, but getting your nails done, you do it for you because you want to do it for you. And the value is it's better for your well-being. And the value of that to somebody depends on person to person, but some people, they'll pay thousands of that sort of thing, and other people might not be interested at all. But the people that are interested, it's something that they feel they are getting a benefit from, and that's why they're coming to you. And that value will depend on each person, but they wouldn't come to you if they didn't appreciate the service.
But I think, would you recommend having like a split model where those who say are entrepreneurs or business owners who see that direct benefit to productivity, mental health, emotional, that there would be a different pricing strategy versus those who I also believe my services support, but aren't in a position financially to sort of support a cost benefit from a business perspective. You know, an average person who is suffering from grief or trauma, etc., would need a different approach because that value and return's a bit harder to.
Yeah, 100%. And actually, by having different pricing structures, it gives people a choice. And by having this is what you get as a business owner. People are going to be like, actually, no, I want to spend my money on that because that's how I'm going to benefit from it. Yeah, I don't want to be put in the same category as these other people. When Rachel was doing an MBA at Cranfield, there was an ex-student who started a business mentoring and coaching big business owners, you know, like of Nestle or whatever. And he would charge them, it was like 5% of the growth of the business. And obviously these businesses are absolutely massive. And he'd be coming to these Cranfield meetings in a helicopter. So the value to them is huge because if you can help them with their personal lives and their business, that, like Rachel was saying earlier, those sort of people are getting a much bigger value out of you than the ones that, you know, aren't running the businesses and just doing it for whatever reason.
Thank you.
Thank you.
James, can I ask a question?
Yeah, just trying to find where you are on my screen.
Oh.
Oh, there you are.
So I'm in the wedding industry and I have my packages for my couples, and I've just revised the pricing on that. So I'm really happy with that. But I'm looking to go down the corporate route as well, corporate events, providing music for that side of things, and one-off events like big birthdays and things like that. And I just have no idea how to price that at all. So I don't know if you have any advice on like where to start with that, because it's a one-off thing. It's a one-off event. Like I just don't know where to start with pricing it.
Okay. Have you done any competitor analysis?
It's really hard to, because for the wedding side of things, people often have their prices on the website, so I've done that. But for one-off events, I don't know how I would find out that information.
Could you call them? You don't have to be Anna, but you could, you know.
You mean like call other musicians and find out what,
Yeah.
like do some secret shopping?
Yeah. Or have you got anybody? Have you got any friends that are in a similar industry?
I'm sure I have if I thought about it. Yeah.
Yeah, I think you'd be surprised.
Yeah.
Or even just reaching out to people on LinkedIn or whatever. Just say, hi, I'm in your industry and I'm just starting out. I've actually got lots of questions. Rachel gets that quite a lot. And sometimes if you run a business and somebody's generally asking for help, it's nice to just help someone every now and then.
Yeah. Yeah.
So that's the reaching out side of things. But then it doesn't, you don't have to worry about what your competitors are charging. It's what's right for you.
Mm.
And you can see what the demand is. So you could put some prices out there, see if there's any take up, almost like selling a house. You could put a price out there first of all. If that's too much, then you can reduce it.
Yeah.
There's lots of different things you can try.
Yeah. Okay.
Yeah.
Thank you.
Cool.
I have a question.
Yeah.
So to introduce myself, I also have an accounting practice. I'm based in Cape Town. So my question is we did a major pricing revamp about 2 years ago. And we charge the normal way, I guess, with cost plus. And then we have a little bit of a psychological pricing aspect to that, where we say like, okay, do you want the basic service or do you want like a more like comprehensive or a previous service? So then we add either 10% or 20%. Kind of like, do you want to sit in like economy class or coach of the plane or in like business or first? But my thing that I still struggle with is then how to charge for advisory services. So then on top of that, we have the option of like, do you want, we call it the level ups. like, do you want what we call like operational accounting support, where we'll go in and we'll actually document your processes and we'll train your team on what they need to do. There's like a pricing review service, which is then where we will help you build your spreadsheet of your prices and help you when you need to increase those. Then like things like budget management, cash flow forecasting. And these kind of seem at the beginning as like one-off kind of services where you would imagine, okay, just like charge them the hours that you charged for it or spent on it. But they are actually ongoing services, because we don't want to, spend like 10 hours helping clients revamp their prices. We want to then help them maintain that, because a lot of the time, or for example, we don't want to help them build a budget, but then not look after it going forward, because a lot of the time we'll invest time in setting up these amazing templates, but then they won't use it going forward. So it is a fee that we do want to build into their retainer. We only work with retainer, fixed monthly retainers. So when we work with a consultant to revamp our pricing model, she showed us, okay, you add a percentage of their fee, and that is the percentage that you're going to charge each month for like the budgeting monitoring. But sometimes I still question like if that is the most effective way to do it. So like, for example, and our currency is different, so I don't know if this example would be relevant, but like say the client's total fee is like, I don't know, £2,000. I don't know if that's like a lot or what. And then they want budgeting management. So then we'd say, okay, that's worth 5%. So then we'd calculate that fee as then £100 per month. And that portion of their monthly fee goes to quarterly budget monitoring. Obviously, the more frequent it is, the higher the percentage is going to be. But yeah, long story short, that's my question.
Yeah, I feel like that's fine, but my worry would be larger businesses are getting penalized and small businesses might not be paying enough. I don't know if that's how you feel. Is there anything stopping you from doing it case by case and saying, okay, well, this is going to take me this many hours. I'll assume it'll take this many hours over the year, and then splitting that over your monthly payments?
I feel like that would be better, because at least what we found is exactly what you said. The clients with bigger monthly invoices, it's a lot for them to get those advisory services. Whereas the smaller client, their percentage is very small. And maybe they are like an online shop and it's their pricing service that they want. And they've got like 500 SKUs, and it's actually a massive job for us to look after the pricing. So yeah, it's just nice to hear that confirmation that the percentage kind of method doesn't really work, because that was what was recommended to us, and it's better to give a yearly allowance of hours for those kinds of tasks and then split them over the year.
Because then you can increase it or decrease it depending on if they might want more stuff as well.
Yeah.
So Rachel just messaged. You're welcome. And she said 1 minute warning. Well, I think that's been a minute now. So, so just before we go back into the other room, I think I have to pick on some of you. So has anybody got a strategy that they want to be picked on when we go into the other room? Oh God, Kate, don't shake your head. There's some messages in the chat. I might have to come back to those messages and go out to the group. Okay, we'll go back to the main group and we'll wing it. But on a serious note, though, if anybody does have any questions or they want to spend more time on this strategy, I'm happy to do like another little session just to finish off, because I feel like we covered quite a lot today, and doing a whole strategy now is quite difficult. So, if anybody's got any other questions, they want to email me. I'm james@strivex.co.uk. So yeah, I'm happy to finish this off with you guys. Cool. Okay. So how do we go back to the other group? Breakout rooms.
I've got a little button down the bottom that says leave room. So
have I. Is it just the
leave
room?
the room.
Okay, good. If we leave everything, then that's Kate's fault.
It's my fault. Sorry, everybody.
Oh, hang on. I've just got a message.
I've just got that pop up too.
Let's do that. Hi. Hi. Just checking
Hey,
everyone is
everyone
here.
made it back.
Okay, Katie did tell us to click the leave button. We weren't sure if that was leave everything or just leave the breakout room.
All right. People are just trickling back in.
So, Rach, we did about 20 minutes of strategy plan at the end, but because we covered so much, I don't know if people really have a whole strategy they want to talk about. I mean, I spoke to Hannah a little bit, I spoke to Bianca a little bit, and a couple of others, but not sure picking on them is going to be a great idea.
No, it's okay. I actually feel like if there were more people that wanted some help, if you could just explain what it was that you were doing, I feel like it would benefit everyone if anyone wants to continue doing strategy live before we move into sharing.
Yeah, okay. Hannah, we spoke last. Do you want to just explain the questions we were talking about? Actually, no, it's Janine. But sorry, it was Janine, but Hannah we spoke to.
We did. I was asking about I'm in the wedding industry and asking about how I can move into the corporate events area in providing live music and knowing how to price that, because at the moment when I get a one-off inquiry, I just kind of pluck a number out of the air and I'm always worried I'm overcharging, or for a one-off event like a birthday or something, because my packages that I have don't fit that event. And so I don't really have a strategy for that. And so I was just asking kind of advice around that, and knowing how to approach it.
Yeah, so we spoke about speaking to competitors, speaking to peers, Rach, and then we also spoke about just putting prices out there and see what the take-up is as well.
Mm-hmm. I'd say as well, there are different problems that people have in those two markets. So, for example, we've just done a couple of in-person events, and it just being as stress-free as possible obviously is the target for both of those people in terms of booking you. But I'd say the problems are quite different in terms of maybe how you're talking to those customers about the problems, how you're talking about how you make that easier. And so if, for example, I host corporate events and I'm booking you, actually having a roadmap of like, this is what I'm going to do on the day, and this is how hands-free I can make your life so that you just get to do your in-person event. I'll be running around behind the scenes making it happen and you don't need to worry. I feel like even running different onboarding processes for different people can really help. I guess just make sure people know that you see them and make sure people know that you have thought about all of the things that bother them. And again, that comes back to like knowing your client, like talking to them about that. And I'd say one of the best things that you could do there is just continuously ask for feedback. So if you've done that before and you've done it well, like continuously say like, what were your worries before you booked me? And like, how did I mitigate them to help you understand how you can then sell better to people before? Because that's something that we have all of the time. Like very often the worries and the issues that we think our clients have actually are quite different to the worries that they have, and the ways that we help them are actually different to what we think they are. And so just continuously asking for feedback on service, value for money, like how did you feel before you worked with us as accountants versus how you feel now? Like that's the best future marketing that you'll ever get, is like just asking people.
Yeah, definitely. And I think quite often people will say, what's your hourly rate? And they just think of it as music per hour without taking into account everything else that is involved with it. And so conveying that, I think, is something that I need to double down on.
Definitely.
Yeah, thank you.
Can I jump on just to speak to Hannah as well? Just because I'm a musician as well, working in the wedding industry, that if you haven't already, there's the Musicians Union, and they have a really clear breakdown of what they recommend as minimum prices, and it covers everything from the basic like hourly rate, depending on how many people are in the audience, rehearsal fees, travel fees, and all that, and like even porterage of instruments and stuff. And it's a really helpful, at least starting place, if nothing else.
Yes,
But
thank you. I am in the Musicians Union, but
yeah,
I hadn't thought to go back to that and revise it again and look at it again. So yeah, thanks for that.
yeah, I just find it a helpful starting place. And if anyone bites back about pricing, that at least you have somewhere to direct them to.
Yeah, sure.
Yeah, so I don't know if that's helpful.
Yeah, thank you.
Yeah, and I think as well, like when you, especially in service-based businesses, generally like people don't understand how your business works or how any business works. And so really laying out like how we do it in our proposals, we explain how we book work in, turnaround times, like you can't Amazon Prime next day delivery a tax return. Like the reason that you choose to work with us is because it's a real person doing it, not a computer. And so we just explain our business model to manage expectations and set the tone. I'd say music and musicians is something that people think if they ask for an hourly rate and you give an hourly rate, like they'll just multiply that by 3 hours because they just want something from 7 till 10, not realizing that you would come, you would like bespoke the music to exactly what they want. You'd understand the vibe, like you'd ask them for a vision board of their event so that you can bespoke the music to the situation. You need to rehearse. And so even just over explaining the way that your business model works, so that if you are you sit more in the bespoke niche end of the market, you're actually just working with people that want service delivered at that level as well. Amazing. Is there anyone else that you, James?
So can I ask you a question just on a separate note about I teach music as well, and so I'm teaching sort of one-to-one students, and I have sort of a pricing structure for that, but I'm looking into doing more group things. I've done a few group things in the past, and I try to work out based on if I have to hire a venue or something, if there's like chaperones or whatever, and like I need a certain amount of students to actually run the group, and then I sort of divide the price by how many students there are, which is probably not the best way to do it, because then that's like just how much I need to break even, never mind paying myself. Just wondering if there's a better way to approach a group setting of how do you charge something, because you might have 5 students or you might have 15 students. How would you price that?
Yes, I'm actually we've got Rianne in the group as well, who is different, but she's a swimming teacher. And so we've actually done, I would definitely encourage any of you who do group things to watch the product-based business recording, because we basically built cost cards for every single product to understand what the actual costs are of delivering that product or that service. And then we did some competitor analysis to understand how we can do that. And then we brought in average gross and net profit margins within our industry based on market research to then work out where do we sit in comparison to the competitors, where do we sit in terms of the margin, and where do we sit in terms of covering our direct costs. But even with Rianne, that's something that we've looked at specifically again in terms of covering the staff, covering the almost like compliance and regulatory elements of swimming or teaching in groups. And so I don't know if James has anything to add as well on group teaching or like one-to-many resources where it would probably be too cheap if you just divided your hourly rate by the number of students that you're teaching, whilst also making sure that it's a good price for them and whilst remains competitive as well.
Yeah, it's difficult, isn't it? I guess maybe there's a you can set your pricing up so that there's a minimum you have to take for it to be worth it. Otherwise, you wouldn't go ahead. But then I don't know if you have that much interest to not go ahead. What are the costs with running the sessions?
So I'm actually running a wee Halloween session like the half-term break, and basically the most cost of it is really that the venue hire, that I have to pay like an hourly rate to hire the venue. And travel fees are minimal because it's around the corner. Depending on how many students there are, I might then also need an extra person who will be kind of coming in on just a volunteer basis, but I'd have to pay her for her time to be there, which then increases the cost quite a bit. And I've run these sort of workshops before where I can pay her and I can pay the venue, but I don't really pay myself. And that workshop at the minute, the numbers are really low, so I'm probably looking at having to cancel it because it's just not going to be financially make sense.
But yeah,
What's the order in which you do things? Do you book the event and then send out the requests, or do you get people's interest and then book the event?
I book the event first and then, advertise it.
I guess it's difficult because people want to know where it is, but is there a way in which you could gauge people's interest before running an event?
I did that over summer, and I ran a workshop, and it was a piano workshop, so I had to buy pianos for that one. It was really expensive. And so I had to make sure that I was going to get the interest in doing it. I ended up getting loads of people say that they're interested, and then in the end, I didn't get that many people booked. So because it depended on the dates that I ran it. And then, of course, with summer, you're also dealing with people then last minute decide to go on holiday and stuff like that. So yeah, it's a tricky one that I sometimes because I run these sort of one-off workshops all the time. And sometimes it just depends on the date, I think sometimes, or the venue, that sometimes they're really, really high interest and sometimes they're not at all. And so then I always just struggle with like pricing it without it then becoming so expensive that then people just don't come.
So just in case this helps you, because I think it actually will based on the stuff that me and Rianne have done before. I'm just looking at, me and Rianne built a spreadsheet in her consulting session, which had the costs associated to every single person. So it had the hourly rates that she has to pay those people, including a lifeguard, an assistant teacher, and a teacher for every single session. Again, that's the assistant is almost like a stepped fixed cost in that it goes up depending on the number of children that are in the pool. So lifeguards, assistant, and teachers, we've just got a reference on their hourly rate. Then we built a metric of all of the different classes that Rianne offers. So adult lessons, wave, splash, and baby lessons, of all of the different lessons that she offers. We then mapped out for those lessons, how many teachers do you need, how many assistants do you need, and how many lifeguards do you need. And then one of the biggest things that we realized that Rianne wasn't accounting for was when she was pricing, she was assuming 100% capacity of every single class would be filled, which meant that if someone dropped out or if it wasn't at full demand, she immediately was not making profit. And so something that I'd really encourage you to do, if you have any data on this, is to look at your average capacity in lessons. So in another life, I used to work in the care industry. And so we used to run all of our financial assumptions based on average capacity, because every room is not filled in a nursing home at all times. We ran always on average capacity. If we were high, we were winning. If we were a little bit low, we were still making financial decisions based on average capacity. And so let's say, for example, you had a 80% capacity of every class was filled, either due to sickness or someone's on holiday or not turned up. You build your pricing based on just below your average capacity. And so if you are full, you're great. But even if you're running at your average capacity, you know that you're still making a profit. So I'd encourage you to almost make a cost card based on just below your average capacity for every single class, whilst knowing that you should probably be reviewing your deposits and payment and cancellation policy so that if someone has booked a class, they still pay for it. Whilst also looking at average capacity, because if it is in a group setting like that and there is a capacity, very often average capacity, it's very easy to assume full capacity at every single lesson, but that's the thing that will really screw your profit. Skew your profit, not screw, it will also screw your profit, skew your profit if you're looking at pricing. But average capacity is something that in group settings, especially in schooling where you have upfront costs, you need to make sure that at below your average capacity, you've still covered all of the costs. And that as long as you can fill and maintain those places, you're still running really well. I don't know if Rianne has anything to add based on that.
Yeah, the one thing I will say is that I kind of do, and a lot of it is explaining to customers. They're like, you're paying for the space. I don't care if you don't come. I mean, I do, because you're not going to keep coming, because you're going to be like, they're not making progress. I'm like, I can't teach you if you're not you. But generally that it's like, yeah, if you don't show up, I totally get that for you, it's costing you like £8 odd. But if you don't show up, I've still got to pay my lifeguard. I've still got to pay for the pool. I've still got to pay me-ish. But yeah, what I did, I very drastically made the decision to increase my prices by 25 pence. And it hurt me. And I worked it out, and it cost my customers an extra £10 a year. And it made me an extra £3,000. And I was like, oh,
that wasn't as scary as I thought it was going to be, but it did take Rachel bullying me a little bit, a lot.
Quite aggressive, actually, yeah. I'm just wondering if there's anything that we ran through. Does anyone from the product-based business have anything to like add or share? Or if you were a service-based business, would you take it in? Just before I start picking on people. I guess Lucy, I'd love to hear from Lucy. Lucy was the person that inspired today's session.
Yeah, do you know what I meant to ask you? I've totally forgotten to do. Where does VAT come into this?
Oh, great news. So, when we're building cost cards or when we're looking at pricing, we would encourage you to build everything based on true cost. So do everything as net.
So without
that. Yeah. So sales price should be without the VAT. Cost price should be without the VAT.
Okay.
Quite small on my screen. I can't work out what face you just pulled.
It's a face of horror, actually.
Okay.
That's the face I was pulling.
Did you do one with and one without, or?
No, I just worked it out, and then I was looking at the cost, and I was like, oh, that's actually all right, but that was without VAT. So,
because you're B2C and your customers have to add on 20% and can't reclaim it, right?
yeah, but the current cost includes VAT.
Okay.
So
Yeah.
it's absorbed into the cost,
Got it.
supposedly. Okay, that's interesting. Thank you.
Yeah, we'd do all of it without VAT. And again, we were working out gross profit margins, but you can extend that cost card to include all of your overhead and the tax to work out your net profit margins, which would really help you to run a like bottom line. Again, if you think you're going to sell 1,000 units in a year, divide your accounting fees by 1,000, like divide every single cost within your business by 1,000 to work out ultimate net profit margin, including tax.
I think it's a hard one as well, because I also think when you are trying to grow a profit-based business, a product-based business, when you're trying to grow, you're not necessarily, you're trying to like acquire customers, and then you've got to think about other things like lifetime customer value, etc. So yeah, I think I need to like sit down and properly work out the cost of my marketing, because that's currently what's skewing my numbers.
And something that me and Grace had a really good chat about, which is Bianca's counterpart, is customer funnels on digital passive products, because digital downloads and passive products are, I'd say, even harder to price because you've got no idea how much you'll be able to sell, whether or not you'll be able to recover your costs. And so if anyone is looking at building a funnel of products to better understand how their customers move through that's something that like I've done a lot of work on in terms of Accountant She, and I've like changed the way that we do that in different ways. And so if you're looking at, I actually might like to sell one product at quite a low price point to show really strong value, to then get people to move down, which ultimately would result in someone initially coming in on a free email subscription, which turns into a £25 product sold, which when they move down actually means that I've converted them into, over £1,000 worth of products by giving away one product at a low point to move them down the funnel. If anyone is funnel building. Sorry, Lucy.
I was just going to say, yeah, that's just is what it is, isn't it? It's like a real hard, like it's hard to actually work out, which is why I think maybe there's an element of like the hard, like black and white figures, and also like value added, etc.
And so within the product-based business room, we started with a cost card of understanding the full, like the direct cost associated with selling a product. Then we looked at profit margins. Then we looked at what our competitors were doing. So we each went away and found 2 competitors and looked at where we sit in terms of price and where we sit in terms of value, so that every product-based business has a cost card for every single product. And that's where, if you're at quite a high value and high price point, you might be sitting quite far away from cost. But if you do run things like special offers or you bundle things, you can use those to make sure that you're never sort of over discounting your products, especially as we build up to the C word, the other C word, not Chili's, within the product-based business land. So we have some final questions for you. I'd love for you all to use the chat or bring yourselves off mute if you are up for it. just going to share my screen. So the first question is, what pricing challenges do you still have after today? Obviously, knowing that lots of people, I imagine, will watch this on demand 3 times or watch both sessions back and do a quality of life audit. With all of that included, I'd love you to use the chat or take yourself off mute to let us know what pricing challenges you still face. Again, we use a lot of this data to work out how we can best serve you, how we can best solve your problems, but also just really, really useful in case we ever run these again. It'll be really helpful for us to understand what problems you think you still have based on the content that we've covered today. Having the guts to say the prices out loud. Quantifying the intangible value.
I think the challenge now is in knowing how much work we've got to do and actually thinking about pricing properly.
Yeah.
Awareness. That's the challenge.
Can have a whole session based on drafting my pricing strategy once I've done the work. Quantifying intangible value. Again, I feel like just knowing the people on the call, I'd say like Grace Robinson, Haley Dawson, Lewis, probably Susie, and definitely Britt. Like quantifying that intangible value, the very, very, very best way you can do that is speak to your customers. So I am one of Britt's customers, and every time I speak to her, I'm like, charge more, like quite aggressively, because she's just brilliant and has changed my life. And so quantifying that intangible value, the best way that you can do that is talk to your customers. If you have a lot of customers, I know Lewis sort of runs a platform and has lots of customers. Whether or not you can incentivize people to give you feedback, or you could hold mini groups. Any book recommendations on pricing? James Harris. Oh, I feel like you're not a big reader, James Harris. No.
Is selling to serve about pricing? Or is that about selling?
About selling, yeah. Yeah, so I feel like maybe we could do a follow-up session on selling after we've done pricing.
I did talk about that a lot actually in advertising, how one impacts the other. It's a good idea.
Katie.
So I'm an accountant as well, and I've had my practice for, I don't know, 20-ish years, and I've just taken on my first employee. So the clients I find difficult, I've had them years, and they sort of become friends as well, where we are friends. But like, for instance, a lot of them are like huge construction industry companies where their materials and everything went sky high at one point. They've got they're contracted into what they're selling to their clients. So they're contracted into that price, but even though the materials have gone sky high. So, and then in comes the VAT reverse charge, which creates me a huge amount of extra work for them. But their turnover isn't going up. It's actually like they're in effect losing money. And my fees need to go right up at that point, because like the extra work for me is considerable, what I'm doing with, the implementations from HMRC. And I don't know. And I often feel like a concierge accountant where I'm just on call all the time to them. They'll give my number out to employees and things as well. I'll get WhatsApps at 10, 11 o'clock at night. Can you just? And I end up never charging for all of this extra work. And I was terrible as well. And it's been really great. Thank you, James, for all the insight and the tips. It's been brilliant. I'm definitely going to do some secret shopping around because I speak to other accountants. I have lots of colleagues, and I speak at Lovell Blake. So I knew the pricing structure there, but I was terrible for not inflation. And then speaking to my colleagues now, I'm like, what are you charging? They're like, I don't know. I was going to ask you, what are you charging? And we are all just kind of finger in the air, and it's terrible. But yeah, I find it difficult because there's a lot I call my bread and butter accountants. I've got around that money, and there'll be big amounts of income for me. And now taking on my first employee, which was scary. So yeah, how do I broach that with them? And all these, when I'm getting these random can you just with these threats from
Have you
employees and
spoke to them
things.
at all? Have you said anything so far?
Yeah, I do speak to them, but I'm quite nervous about. I do find that a difficult subject with them, and I shouldn't, should I? Like, they're in it for business and to make money, and so am I. But yeah, I do find that a difficult
Is
conversation.
it lots of them, or is there one specific one that's a big portion of your fees?
Yeah, I've got probably 4 that are quite huge amounts of my revenue, and they're mainly construction industry. And also there's ones that are management companies and they own considerable amounts of property as well. So they feel like they're hard up at the moment because the interest rates on their mortgages have gone sky high, but they're still taking on loads of extra management properties, as I have a load of extra work there to do. And I guess I have to be more assertive about it and say to them, come on, we've taken on all these extra customers
Yeah,
with the
I
management
feel like
property.
with the construction companies, it's not like they're not going to pay his extra material fees, or with the management company, they're not going to pay the extra interest. So why should they not pay your extra fees?
Yeah. Oh, sorry, Katie, I just muted you just because James's voice was echoing.
Right.
You can take yourself off mute if James isn't speaking.
I'm just figuring it out. Yeah, I guess it's just having like being brave enough to have that conversation with them of, and with their employees texting me and things like that, all these extra bits to do.
Yeah, there was a lot of. Sorry, I'm just going to mute you. It's bouncing. There was a lot of demand in the chat when I said about selling post pricing. So just to set the scene as well. So after this session, you're going to get recordings to both of the sessions, as well as a full workflow of work to complete. So how can you make sure that you're top and tailing this? How can you make sure that you're not just coming to the session and then leaving it there, with a full process of like follow-up questions to ask yourself and work to follow through with both of the recordings on there as well. There was a lot of demand for selling. And again, selling is something that pricing is only one element of it. Like, how do we actually sell? And so I feel like, yeah, we could almost do like a live example of how to sell, how to talk to clients about pricing. We price quite transparently. So on like prospect calls, we'll have like the pricing matrix on one screen and the proposal, and we'll literally go through it live on the call and sort of ask for objections. That's quite hard to do. That's a muscle that you have to build, and it can take time to do it. But I firmly believe, and me and James are quite strong like oversharers when it comes to business, because a lot of people don't share this stuff. I feel like actually just seeing somebody else do that is a really, really great way to do that. So we could even just do like a live prospect call to help people understand what that looks like before we then get into like selling, handling objections, converting, and how we do pricing as well.
I just, sorry, quickly, just for Katie's benefit, well, maybe others too. This last year, we started getting clients to agree to the matrix and not their fee. And so if you've got clients that are growing, by getting prospects to agree to a matrix of growth, they've already agreed this change before it happens. So I know there's a particularly up this situation, but in the future, if you take on clients, it'll just, where there is scope creep, they've already agreed to it. And that made a huge difference for us as well.
Definitely. One more follow-up question, which is, what changes are you going to make to your pricing? Just to help encourage other people, I think it's really easy to feel a bit alone in pricing. So if anyone's willing to share a big change that they're going to make, would love to have that in the chat. Ooh. So Enya is going to incorporate some minimum fees. Susie's going to stop charging mates rates to everyone. Grace is going to increase her hours, and I imagine keep the price the same, so increase her margins. Change up the accessible price point of our products. Expectation of annual increases. Yeah. Secret shopping. Yeah, Ash said friends and family should be paying 110%. Me and James believe that mates rates don't exist because your mate should want to pay full price. Alrighty. Same as Rianne, annual increases. Promote value in social presence. 100%. Cool. Okay, expect a sales session shortly following this. this has been really reassuring to the new prices I've been working on, and something that we said with Lucy. Lucy said, "Oh, this. I mean, VAT might have now been an issue, but Lucy said it was actually just good to have all of the numbers that we ran came out to what her gut was saying, but it just helped to see that there was method to what her tummy was telling her, to then come back to as well." Janine said, "I find the tendency to want to do more friends or family, so definitely charge them more." Yeah.
You can get the vibe from our session, Rachel.
Huh?
You can get the vibe from our session.
Yeah. Definitely go with the gut. Reevaluate workshop pricing, below average turnout. Yeah. Awesome. Cool. So we will actually be in your inbox later on today with the full worksheet that you need to follow to make sure you top and tail this. Someone said thank you for the session and confidence boost Harris's. That is our official title. Got a few hours of sales calls now. All right. Amazing. Alrighty, cool. So we will be in your inbox later on this afternoon with full recordings of both sessions if you've watched them on demand, with a worksheet that you just need to follow through. And yeah, I would say expect a sales session very soon. But thank you so much for joining us. Again, the very best way to say thank you is to share the fact that you were here to say thank you. And we will be in your inbox shortly. But have a lovely weekend if we don't speak before.
Thank you,
Bye,
everyone.
everyone.
Bye.